So let's do an analysis of a trade in a company called DNOW. Now, this is a IPO that just recently came out in 2014, and you can see it immediately jumped up here, and it kind of vacillated for a little while, and then it pulled back. And I made a little bit of money on this trading it after the IPO, and then I decided, you know what, this is an IPO. It's in the oil business, the drilling business, and there's probably a good chance that it's going to go up with this Iraqi tension and all kinds of other worldwide tension. It's only going to help the oil market. So longer term, I think it's a good play. So I could buy 1,000 shares or 5,000 shares at say $32, and that'd be about $160,000. Or you could purchase the option. Now the option gives the option to buy at a later date. So what we did is on June 16th, here's a picture of the option. On June 16th, we bought this option at 75 cents a share, or 75 cents equivalent a share. Options trade in 100 share lots. One contract equals 100 shares. So we bought 50 contracts, or basically 5,000 shares. And you can look at this chart and you can see that as DNOW went up on the stock, this chart went up percentage-wise a whole heck of a lot more. The stock is now, or the option is now worth 250, and we paid 75 for it. So you can see the power of investing in options versus investing in stocks. There's lots of different great things about investing in options. There's some risk involved too, but if you can manage your risk, it's a lot better situation. So for example, that stock went from 33.20 approximately, it's about the midpoint of where it was on June 16th, to where it closed on the 27th of June, 36.86. That's 11% move on the stock in just a couple of weeks. However, at the same time, the option moved from 75 cents to 260, and that's a 246% move. That's after commissions. So we took our $3,750 investment and we turned it into $9,215, which is what it's worth today. And we only risked $3,750. That was our maximum loss. So here's a quick little portfolio snapshot of the actual position sitting in the account. Yes, we did actually do this position on the 16th. You can see that it's a July 19th of 2014 35 call. We bought it at 75 cents, and it was, in fact, it was up $1,350 today. The whole position today, P&L unrealized, is $9,215. So pretty good risk to reward ratio. We risked $3,750, and we were rewarded so far with a $9,215 increase or value of that option. Now the option does expire in a couple of weeks, so this is really only a 1-month position that we took. But that's the beauty of it. You can make 10 grand in a month. If the stock keeps going higher, percentage-wise, you can see how much more leverage you get by owning the option rather than the stock.